Okay folks, I hope you got your seatbelts on because in today's video, we're going to go through the latest on the GameStop situation. I'm going to go through 4 major points today: the bigger picture bullish thesis for GME stock and the real opportunity as well as the real risk that comes with that. Number 2, the short interest situation. Situationista, a key GME short interest metric that just came out today, is now higher than it was in the January 2021 squeeze era. We'll show the recent data on that as well as failures to deliver and what that actually means is going on behind the scenes. Number 3, we're going to cover Roaring Kitty's latest moves and certain hints that he is bringing to the table right now. And finally, number 4, I'm going to explain exactly why I believe if all else fails, we will still see a major surge by June 21st. And we'll get to work, and as always, make sure to do your own due diligence on all ideas presented here on the channel. If you're the one taking the risk, you got to be the one doing the ultimate frisk. And today's video is brought to you by our Kitty50 coupon code on ZipTrader Options. If you want to learn how to trade options with our step-by-step lessons and get our alerts like our GME options alerts, I'll put the link to that down below. Again, coupon code Kitty50, you'll get 50% off. Okay, folks, so I just want to start from the beginning by stating the entire GameStop bullish thesis from my perspective. Why does that matter? Well, because if you don't understand the bigger picture thesis, you won't understand why the stock is even worth paying attention to in the first place. Okay, so then Charlito, what's the thesis? Well, the thesis is that Roaring Kitty will drive more attention to the stock, and that attention will result in substantial buying pressure on a still very restricted float, which will continue to cause massive spiking and eventual short squeezy McSqueezy should the spotlight continue being on the stock. We said something similar after the first big sell-off from the first Kitty pump back in May, and likewise, Kitty wasn't done with his showmanship, and we've had 2 more spikes since then. I believe this will continue to happen and will get to higher and higher highs. Now, can that thesis be derailed? Absolutely. I believe more offerings and I believe Kitty going silent are 2 big possibilities that can indeed derail said thesis. Do I believe that if GME doesn't hit a new cycle high after a few more attempts that even Kitty might lose some of his steam? Yes. But as I said in the last video, as of right now, he has a direct line of communication to around 4.5 billion in retail capital, as well as, of course, his own position. He's got the media covering his every move. He's got millions of people on thread after thread following him. So again, he's still front and center. He's about as powerful now as he ever was. So building on that, let's talk short interest data. Shout out to Unusual Whales, by the way, for said data, but short volume is right now higher than it has been at any point in GME history, and key with that being that it's higher than it was during its original infamous 2021 era meme rallies. Now, there's a few possible reasons for this. Number 1, short sellers have been more adamant about throwing shares down now that we are at higher prices, and whether that's to get a higher average short price or to discourage new entrants, well, a share dump in any general stock tends to result in holders of said stock capitulating and selling off large portions of their positions, of which creates a self-fulfilling prophecy to the downside for short sellers very, very quickly. However, obviously that hasn't usually worked with GME, which means in effect, short sellers just keep getting themselves more and more trapped. So in that sense, the battle right now is more heated than it was even in that peak 2021 era, which could mean that we are closer to an explosion, an explosionista. That's good news, but there's also a bad element to this data point. Another big reason there's more short volume today than there was in 2021 is simply because there are more shares today. If you look at the shorted shares available over time, well, that's been trending up very, very aggressively since May. And the thing you got to remember with GME is that its float has been locked up for so long. The whole bullish thesis for GME as a short squeeze situation is the idea that its float was locked up and more shares couldn't be dumped. However, since May and since this recent offering, well, of course, more and more shares have been made readily available for short sellers to easily dump onto the stock, suppressing any kind of uptrend, which means that these offerings that GME has done, these 2 different offerings with some 120 plus million shares, well, those don't just have the impact of increasing the float, but actually they have the effect of potentially increasing the float up to 2x for every new share, because each new share gets dumped and then it gets dumped again and brokers lend it out, allowing it to get dumped again. Of course, that's the same exact game that killed AMC's euphoria time and time again. Now let's go ahead and talk about failures to deliver here, the beautiful FTDs. So failures to deliver are pretty straightforward. Failures to deliver are when you go and you say, hey, you know what, DoorDash, I want Chipotle, I want Subway, I want my Mickey D's. And then you order it, you wait 2 hours, the driver is stuck in traffic, but he says, don't you worry, bro, you're going to get your order. And then you wait another hour, and another hour goes by, and all of a sudden, no order. What happened? Well, that driver failed to deliver. It's the same exact thing when it comes to short sellers. Failures to deliver in the stock market occurs when one party in a trading contract does not deliver the security or cash as agreed upon by the settlement date. This can happen for various reasons, including most famously manipulation via naked short selling. That's when a hedge fund or other institutional player dumps a share without actually having secured one to dump. And it's a nice hack that short sellers are able to do because of the structure of how they send orders. But the idea is if there's a lot of failures to deliver, it means that you have evidence that the heat is turning up on those greedy little shorts. Now, sadly, failures to deliver only come out in batches twice a month and lagged by about 2 weeks in terms of the data. We keep that in mind, but in May, we were in a big spiking period for FTDs because of the original return of Roaring Kitty. The question is, where are we now? And I think that when the next report comes out, it'll show we are way, way higher than that May report, even with the offerings. I believe the resurgence was completely unanticipated by shorts. That's why you saw funds like Citron, led by Andrew Left, short it during the first rally, because they believed that Kitty's return was a one and done situation. Okay, moving on to the next point. So Roaring Kitty posts this tweet from The Dark Knight. If you watch the scene from the movie, this is right before when the Joker fills up his bag with a ton of cash. So it's essentially a picture right before a big bank heist. Now, another thing to keep in mind that happens at the end of that scene is that the Joker unalives his accomplices and leaves with all of the money. So take that as you will. But the Roaring Kitty tweet gets more interesting, and this is where we go on to full speculation, which I think is what he wants. But if you look closely at this picture, and specifically the cat head he apparently photoshopped into the Joker's hand, well, you see a 5. He has a 5 there because Mr. Roaring Kitty is a funny guy, and he likes to leave Easter eggs. And maybe he's hinting he's going to have a 5% ownership of GME soon. Maybe GME has $5 billion in cash post-offerings. Maybe GME is going to have its 5th surge in the cycle. Maybe this doesn't mean anything and it's all a big coincidence, or maybe, just maybe, he's talking about the shareholder meeting happening on Thursday that will be met with a reaction Friday, which is exactly 5 days from the tweet. Any of these could be what he's indicating, or maybe none of them. And perhaps I'm grasping at straws with this, but I think this has to do with the shareholder conference. If you look at GameStop's filing, of course, investors are being asked to vote on 5 things happening. The first is elect 5 directors. Yes, the holy 5 number keeps coming up. But anyways, first plan is to elect 5 directors. And if you look at the nominees, you got a bunch of current leadership. But here's the thing. To the best of my knowledge, they can propose a new nominee at the last minute, and that could be Keith Gill, aka the Roaring Kitty, and it would make sense from the standpoint that he's likely going to be around that 5% ownership mark, if not higher, and it's common to put high-stakes owners on a board, and he also fits a lot of the qualifications and experience metrics that GameStop shows that they're looking for. So could that be what he's referring to? Could that 5 be referring to a potential election to make him the 5th member of the board? Maybe. And that would certainly get people excited, but at the same time, there's got to be plenty of regulatory issues associated with that. I don't know if Ryan Cohen would take that risk. But alternatively, and here's an alternative theory for you, GameStop may just use this event as not just a vote, but an opportunity to announce something huge. What exactly? Well, if you go to their dilution filings, they say the money can very well be used for acquisitions. And kind of, it seems like if you look at their balance sheet, it makes sense that it would be used for acquisitions. GME is in too strong a position to justify dilution if without some major form of acquisition coming. Obviously, GME is losing a bit of money right now, but they have so much cash on the sidelines that it doesn't even matter. So I'd say there's a solid possibility they discuss a potential acquisition or even announce an acquisition on Thursday. And quite frankly, anything that can cause excitement for the stock can be a game changer. It seems like GME has copied some of AMC's moves in terms of dilution, while they might copy the move in terms of investing some of their raised treasures into an acquisition. Finally, the fourth part here, I believe that if all else fails, we will see a major surge on GME stock by June 21st. Why? Well, because on June 21st, Kitty's calls will expire. If bears don't push the stock down and it continues to hold above 20, well, Kitty will need to be supplied with 12 million shares, and the buying pressure of buying some 12 million shares, finding and buying some 12 million shares should put some very solid pressure on the price, but more so the anticipation and realization should be enough to cause markets to spiquito. Now, at the end of the day, folks, I want to be very, very clear. Look, you have a stock here with a ripe opportunity, with previous history of breaking out on catalysts, and no reason to believe those Roaring Kitty catalysts are going to stop anytime soon. But also, you have a situation where the board can dilute you to hell at any point. You could have Roaring Kitty dump a ton of shares on you at any point. The government could ban GameStop for spying for the Chinese government. We don't have any reports or any allegations of that yet, but who knows? So just something to keep in mind there. I'm very tired. I just got off a 12-hour flight and I am laid over. So let us know your thoughts on GME down below, and I'm going to get to sleep. Have a good one, folks.